Joining us now is Alan Blinder. He is the former vice chairman at the Federal Reserve. It's great to have you back on. Yes, you published this op-ed over the weekend in the Journal, but you were on CNBC back on June 13th making the same case. You said nobody's talking about it at all, a cut in July, but that you thought it should be on the table. You'd like to put it on the table. I realize we didn't get it today, but the fact that Fed Chair Powell said that officials had a, quote, real discussion about cutting rates, your thoughts?
Well, I think they should have. Look, I don't think this is a grotesque mistake or anything. They signaled and the market reacted that a rate cut is on the way. I think it would have been smarter to do it today and get it done before we get too close to the election. I mean, one of the questions that Chair Powell fielded today was about, politics in the election and rate cuts. And he gave the right answers. The Fed is not political and is not trying to engage in any on either side of the election. But as it gets closer to the election, central banks in general like to keep their heads down. And now they're going to be doing it most likely late in September.
So this idea of 100 basis points that was just laid out by Gundlach, I mean, is that realistic? Because he got a lot of questions, repeated questions in the press conference, Powell did, and he refused to outline what that path could look like. 25 basis points symbolically may mark a shift in policy, but doesn't actually do very much.
No, but it marks a shift in policy, and it does a lot psychologically. Look, just the slightest hint that it was coming today did quite a bit of good for the markets. 25 basis points was once called peanuts by one, not by Jerome Powell, by another monetary policy maker, and it is. It won't only be 25 when it starts. I don't think it's going to come in an avalanche, like we're going to get 100 this year or something like that, because the timing is very different. Remember, the November meeting, let's suppose they cut 25, the first cut in September, which is what everybody is supposing. The November meeting is the day after the election. I think the Fed will want to keep its head down. So that brings you to December. And are they going to cut 75 basis points in December? I certainly don't think so.
So how much, Alan, how much risk do you think there is that the Fed is waiting too long to cut? It sounds like you think it's not a catastrophic decision that they didn't cut today.
Yeah, a little bit. I would think it more if I saw the economy weakening more than it is. It's simmering down. You don't see in the labor market or in consumer spending the kind of shall I call it rational exuberance that we were seeing a few months ago. It's calmer now, but it's still pretty good. We have an unemployment rate of 4.1. That's not 3.7, but it's still pretty good, as Chair Powell said today. The consumer is holding his and her own. So it's not like we have indicators that the economy is sliding downhill. If that was the case, no, I was going to say I'd have my hair on fire. I don't have any hair. I'd be gesticulating more on television. It doesn't look that way.
It's okay. It's okay not to have any hair, Alan. So the consumer softness that we see, particularly with the working class, just in credit somewhat, and then in spending at places like McDonald's. At what point does that become a broader concern?
Yeah, I mean, these things are quantitatively. The more it lasts, the longer it lasts, the deeper it gets, the more people that get involved, the more the Fed has to worry about it. So far, I think they should be worrying a little. I mean, you pointed out that I was advocating for a rate cut today. I'm obviously a bit more worried about it than the average on the Federal Open Market Committee, but it's only a subtle difference of opinion.